Good evening, all. Ira Epstein with your financial market wrap-up for this January 5th, Wednesday, 2022. I'm at 6:20 p.m. right now. What a day. Out of left field, a big break in the stock market. Now, interest rates have been the enemy, obviously, in the NASDAQ and other markets that are looking and saying, okay, those higher interest rates will be a problem for the marketplace. We know that. We had very good numbers out of ADP, showing a lot of people joining the service industry. So between the JOLTS data, the ADP, I got to think that come Friday with the jobs data, you're probably going to have a real good jobs number. The word on the street they're looking for that would be neutral is 400,000. I want to remind you also, we have our live webinar tomorrow at 12:15. You are invited. If you didn't get your invite for any reason, just take your cursor, go up here. As you move it, an icon will appear right at the top. Fill out the form. After you click that, you'll get your invite. You got your password. I open it up at 12:15, and I begin promptly at 12:30 p.m., and I end pretty promptly 20 minutes later. So sometimes I can't get to all the questions. The reason I don't record this, people ask, is when I record it, people don't attend the live one. What they'll do is say, I'll go see it, Ira will have it on the website, and I can view it there. I don't want to do that anymore. You know why? As I did that, the people signing up, I got a lot of signups that didn't show. And they would take up the seats and so on I have, and they just didn't show. Guess what happened the moment I said I'm not recording it for the public to see or my paid subscribers anymore? The room's back to full, and I have interesting questions. That's how I want to run it. So that's what we do tomorrow. Next thing, a little bit of weakness showing up in the energies, but they've been going up and away, so that's a pretty important move. Bonds and notes, they're stretched. You've got a number of days under the lower band. 3 now, be careful. Dollar did not respond, to me at least, all that well. A strong interest rate. You went to 172 almost in the 10-year note. Dollar's not doing well. You know what the dollar's saying? If the Fed's going to do all these so-called hikes, as the FOMC minutes showed today, they're worried about inflation. They're talking about how to run off the balance sheet. Let me tell you, they're not going to start running off a balance sheet until after they do the first rate hike. Running off the balance sheet can be done for a long period of time. It takes a long time because you've got different maturities coming up. It simply means as maturities come up, instead of the Fed buying anything more, they don't. They just get the cash, and as they get the cash in hand, they'll end up giving it back to the Treasury. That's pretty much how it works, and their balance sheet trickles down because of that. Well, with the jobs improvement, and if supply chains are improving, it's only January 5th. We got to get to that to the March meeting that they're talking about to see what the data looks like. Do you have any idea how much data you're going to get between now and then? So I love that everybody's so one-sided. I realize herd psychology, what it does, and that's what killed the stock market. So you went up beautifully from Christmas Day to the first 2 trading days of the year, and certainly in the S&P and the Dow, and you gave everything back today. Isn't that fascinating? By the way, Yale Hirsch, congrats. He said it's day after Christmas to the first 2 trading days of the year, and that's as good as the cycle is. That's all that the Santa Claus rally really is. People have expanded that over time. He did well. Okay, so as we take a look here at the S&P 500, the market is still bullish. I realize it's not at a new all-time high close. I realize we're down this week 1.2%. The world has not ended. The market would make you think it has, but the world hasn't ended. Was I right or wrong in your opinion when I said we're in distribution up here? Distribution can resolve itself easily to the upside. You know that. This could have been a base, but this is what happened today. So at least I recognized what that was. When I take a look now at the chart pattern, you don't have one. You have a higher high, lower low. But frankly, even without today's action, that's what you had. All that today did was a setback in the market. It is not the end of the world, not in this index. When we look at where the market fell back to and where the battle is, How many of you watch me and hear me say when you break down, you often go to the 18-day average of closes, and that's where the market tries to figure out what to do next? I think that was it. When I put up the Bollinger Band, as it turns out, this one hit here, these couple of days, was it. You extended that high, but you gave it back right away. And if you and I take a look from Christmas Day, let's just do that. So we close on the 23rd, we get Christmas. Here's the first trading day. It was a pretty neat little rally that ensued. Now you're going to come in. This is yesterday. Do you agree? So you've come in, and now today is the day where you give that up. Okay, I can live with that. If it's all within the work, that's how it works out. You lost the embedded reading, so momentum is out of the market. The trend has been not here. The bias has been here. The big important thing is you lost the embedded reading, so now you're in an overbought condition that needs churning to work that off. The NASDAQ has been the weak sister. Now, it fell back yesterday, this is Tuesday, right to the 18-day average, creating a downtrend. If the market gives this up, one potential area of support, you've got the 100 and the lower Bollinger Band, momentum down. Where's the market going to go? I certainly didn't see this size of a break today coming, but that's what it did. I'm looking for the support right through there. Nothing has really changed, but it's not a buy. It could be a short cover, but it's not a buy. In the Dow, no, I'm going to stick with what I teach. Okay, this was the strongest of the indices. This is the action yesterday. You get up again to the upper Bollinger Band, even though you're embedded, traders likely took off a chunk of their positions. Today they have to withstand this. If they lose the embedded reading, out they'll go. You haven't lost it. You're at 81.99, but can one index stay up when everything around it fails? That'll be the question for the market. I then look at the Russell, and I've had people that think they know what they're saying, and they go, well, this is the beginning of that move, and boy, this is it, Ira, pay attention. And I brought up to you, well, are we going to embed? This would be the first time that we get a signal. Both numbers on this day are over 80. That was Monday. Tuesday, both numbers. Today's the day it had to have both numbers over 80 again. One more time, it failed. So what did the market do? It gives up everything, even closes under the 18-day average. It puts fully back into play that now you've got resistance starting at the 18-day average all the way up in these layers, including the Bollinger Band. Not a good market. The VIX, when it reopens, it probably loses its embedded reading. I think traders today on the break, let me just show you. This is Tuesday, Wednesday. You didn't ever broke. You just rallied. It's not a dramatic rally, or is it? Well, I don't know. Daily bar chart's up 16%. That's a pretty good size rally in my books. You broke the downtrend. You're probably going to lose the embedded reading, and you could go up to the upper band, which is more pressure on the market. Keep your eye on this market to see what it does tomorrow. It's going to be tricky. As I said in the bonds, 3 days in a row under the lower Bollinger Band, fully embedded, not giving anybody a chance to get short the market. It's just building in and saying, hey, at this part of the curve yield, we have a top in place, and we'll see where we go from there. 10-year notes, same thing, but not embedded. If you come back here, both numbers not under 20 at this point. I think you'd agree with that. And today they both get under it. So it's only day one, day two. You got plenty of time. We'll see if it embeds. It's very oversold. But again, a top of very big importance is in the market. So we started off where I said I thought we would creep with higher interest rates 2022. This was a gallop, not a creep. I mean, I see that, you see it. At least the direction was correct that we were talking. Dollar index going nowhere. This is just a chop, which means the euro's probably a chop, and you can see it right through here. And that's because the weighting of the euro is 40% of the dollar index. British pound, big time resistance now. You don't want to be the hero trying to get the last little bit between the 100-day average and the upper Bollinger Band. You can. The trend is up. You're embedded. I think on the breaks, it's a better buy. I don't think you buy the rallies into that. Bitcoin, still continuing the washout down to 43,750. Remember, this is a market that was just up to $70,000 in October, not years ago, just around the corner, and it is down. And they're still talking right now on TV, including Goldman Sachs. Oh, it's going to $100,000, and this is the place to be. I don't know. I look at the chart. How you make those predictions, I'll leave it to Goldman. But you do realize they'll come out and they'll change those predictions over and over. But they are Goldman Sachs, and you never stand in that way. They're bright. When we come to Brent versus WTI, you've had a big spike in this, okay? We know what's going on. Now the market gets nervous on a big stock market break, and it says, well, maybe if the world economies are going to slow down because of this rise on interest rates and all that's going on, maybe oil at $80 is a problem. Well, let's look at the chart. The only problem oil had is it hit the upper Bollinger Band where there should have been profit taking today. That's basically the problem that this market has. You're right up into that area. That's the only problem I see on the market. If it loses the embedded reading, yes. We had a bullish crossover right through here. Watch, you just did it. And now you've made a new high on the move. That's basically what I look for on it. This market still looks bullish. Here, you just missed the upper Bollinger Band again, but you don't have a real trend. You have a lower low and a higher high, but this rules the day. Does anything look bearish to me on this chart? Nope. Not a thing. When the red line closes under 79, I will change my opinion. Until then, I say the pros will buy these breaks until that occurs, looking for the market to continue up. Same in the heating oil, and it did get right to the band. I think the pros stepped out of a chunk of their position, not all of it, a chunk of it, and they'll have buying power. And again, you had a bullish crossover right through here that you and I had been talking about, right there. There's your crossover. Now it should be going for the highs, in my opinion, of the last high in the move. And there you go. And that's what I was looking for on that. Nat gas, I have said, don't be involved. You're just going to get whipsawed. Tell me I've been wrong. And I recognize this back here. I said, watch out. This is going to start pulling that in, and that's basically what you're doing. So remember, we're going to have our What's Up, you see it right behind me, webinar tomorrow. I told you how to get involved with it. Just go right up here, click, and away you go from there. I'm Ira Epstein. I'll see you tomorrow.